This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Very good afternoon, everybody, across Bloomberg platforms. I'm Carol Massar. Tim is out today. Emily Graffeo back with us on what is a very, very snowy Monday. Continuing, if you could take a shot outside these walls, you would continue to see snow coming down.
That's right. And Central Park getting more than a dozen inches of snow right now. But we're not only going to be talking about the weather, Carol, are we? There's a lot going on in markets right now. The S&P 500 down about 1%. Tech stocks, software names, and delivery companies getting hit pretty hard.
It's once again the AI scare trace. So we're going to talk about that certainly over the next couple of hours. We're also going to talk about the latest on the blizzard, what you need to know and where kind of we are and when does it kind of finally wrap up. We're also going to get the latest on President Trump's 2.0 when it comes to tariffs, because we know big news, the Supreme Court decision on Friday, and then of course the president imposing new across the board tariffs. So kind of trying to keep check of where we are on this process and who's impacted. Hey, and on those tariffs and more, we're going to head over to our own Mike McKee. He's down in the nation's capital, surrounded by top Fed officials and economists, so he's going to weigh in on all of that. Also, Nassim Taleb weighing in on that Supreme Court decision and what it means for the president's tariffs. And then, Emily, I feel like it's something that deals with your world, and that is the private credit and private market world. We're going to get the latest on Blue Owl.
That's right. We're going to talk to Bloomberg News' very own James Crombie in just a few minutes here about the woes actually plaguing that sector and concerns about illiquidity and private credit more broadly.
It kind of continues, and Blue Owl shares are down once again for a third consecutive day. Hey, first up, though, let's get a check on the trade on this very snowy Monday. For that, he's back, Charlie Pellet.
Hi, thank you very much. We got the Dow, the S&P, NASDAQ, all very much in the red right now, as you guys were just discussing. A number of factors here, geopolitical concerns, part of it, but stocks also getting hit on AI and tariff jitters. S&P right now down 72. The S&P at 68.37, dropped there just about 1%. The Dow down 742 on the Dow Industrials, down 1.5%. NASDAQ is down 267 for the NASDAQ Composite Index, a drop right now of 1.2%. The 10-year at 4.02% with a 2-year 3.43%. Gold is up $102, back at $52.09 the ounce, up 2%. West Texas Intermediate crude down 0.5%, 66.18 a barrel. And Bitcoin right now down 4.2%. Bitcoin tumbling back below 65,000, 64,720 on Bitcoin. Software stocks hit hard again today amid anxiety over the impact of AI on company profits. Now, IGV, that is the iShares Expanded Tech Software ETF, that is down by 5% among specific software names. Microsoft down 2.7%, Palantir down 3.7%, Oracle down by 5.5%. Those, by the way, are the top three holdings in IGV. New York City reopening roads and bridges as the blizzard, though, continues to snarl travel. And Mayor Mamdani announcing here on Bloomberg, a live news conference. We covered it on Bloomberg Television and Radio. In-person school will resume tomorrow. That storm, by the way, one of the top 10 snowiest on record. And right now, we got more than 15 inches of snow in New York Central Park. Again, recapping here, S&P down by 1.1%, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Great to have him back. And I got to say, I'm loving the snow. It's a little crazy. Ran my dogs in it last night, but it's really made this city just stop. And certainly the New York metro area just come to a halt.
You know what it hasn't made stop, Carol?
What's that?
That guy jogging in shorts. I'm not kidding. I saw a man this morning when I was walking to the office.
I don't even know what to say.
He was jogging in shorts. These people know no bounds, Carol.
No, it's kind of amazing. New Yorkers are pretty wild. So it's kind of interesting to see what they can endure and kind of get out there. I will say, though, you know, I saw a lot of people getting out, certainly I'm just outside New York City, and just people, you know, throwing on coats, taking their kids out for a walk.
Ski goggles,
taking
ski
their
mask.
dogs, which you needed to because it was really, really windy. So anyway, we're going to get a check on the weather for you a little bit later. It is certainly one of our most read stories. And I think it's safe to say, though, Emily, we continue to see kind of this churn and trying to understand. If you look at the markets, it does feel like the AI concerns about, okay, now what does the president do in terms of tariffs? How do nations push back? All of this is kind of coming to the forefront, if you will, when it comes to the trade. We're definitely seeing it in terms of the equity trade. Having said that, I'm thinking the tariffs are a big topic of discussion, certainly at an event down in D.C. on that, and actually weighing in on Friday's tariff decision earlier today, Federal Reserve Governor Chris Waller, who said the Supreme Court's decision to strike down a large chunk of tariffs that the president has implemented using emergency powers is unlikely to have a significant impact on his view of how the Fed should set policy. He also noted that the Fed March rate cut, really that call hinges on upcoming labor market data, so it's not determined yet. Listen up.
But if the good labor market news of January is revised away or evaporates in February, it would support my position at the FOMC's last meeting that a 25 basis point reduction in the policy rate was appropriate, and that such a cut should be made at the March meeting.
All right, that is Federal Reserve Governor Chris Waller earlier today at the NABE meeting in Washington, D.C. Hey, also at the 2026 National Association of Business Economics Policy Conference is our own Bloomberg TV and radio international economics and policy correspondent. He is Michael McKee. Hey, Mike, good to have you here. Of course, we just heard from Chris Waller earlier from the meeting. Remind us what this forum is all about and who's all there.
Well, it's the business economists, basically, from Wall Street and other parts of the country, companies everywhere, and they gather twice a year, once a year in Washington to talk about the major issues. And when they're in Washington, it's the political issues. So tariffs are sort of topic one, along with what's the Fed going to do. Because there's zero snow here, I got to tell you guys. So it's completely clear.
We're
outside,
saving
so
it for you,
To
Mike.
talk about are the problems we're facing. Yeah, I'm sure you are. But tariffs as an issue are basically being considered by the economists in the same way that Chris Waller put it. We don't know yet what the president's going to end up doing in terms of the level of tariffs he's going to be able to put on, or even when he's going to be able to do it. And even if and when he does it, as Waller said, the Fed looks at it largely as a one-off. Prices may go up to meet the new tariff levels, but then they will stop going up. They'll go up once. So the Fed can look through that and try to figure out where inflation is sans tariffs. And right now, as you heard him say, inflation's low enough that if the labor market is still weakening in the February numbers we get next Friday, then he thinks that perhaps it would be time to cut rates again. But still, some data to wait for.
I do want to ask about the labor market because the year's conference theme is the Great Realignment and explores kind of how accelerating advances in AI are redefining the economy. Is there any talk at this conference just about the impact of AI on the labor market and potentially displacing a lot of jobs?
Oh, definitely. There have been several sessions on that. There was one featuring the chief economist of Anthropic, which does the Claude AI. And the answer is from everybody, the economists and the AI researchers, they don't really know yet. They anticipate there's going to be a big effect. But a lot of people think in the business that it could be a positive effect. We could see more jobs created, or because it gives people the chance to do more, that it would enable companies to sell more of their products. But there's also the concern that a lot of jobs, especially those that are repetitive and maybe low education jobs, would go away. So a lot of talk about what might happen, but no definite conclusions on what's going to happen.
Mike, how would you describe the mood there? Is it more upbeat? Is it more cautious? Is it more, again, TBD because there's just, again, some uncertainty out there, or a fair amount of uncertainty?
Well, I think it's kind of TBD. Last year at these conferences, people were kind of depressed about what was happening, fearing the worst from tariffs and everything else that was going on. And now they sort of have a sense of where we are. Yes, we don't know where tariffs are going, but we've got tariffs now. The economy is surviving that at the moment. and we don't know what's going to happen next with foreign policy. So there's kind of a feeling of let's wait and see and not get too depressed by what might happen, since the things we feared last year didn't necessarily come true in the worst possible way.
All right, we're going to leave it there. Hey, Mike, thank you so much. We're certainly going to be tracking you throughout this event. Looking forward to hearing more. Michael McKee, of course, our Bloomberg News TV and radio international economics and policy correspondent there in D.C. Hey, we want to go back to what is, no doubt about it, for a second day, our top story, and that has to do with the tariffs, the Supreme Court decision that we got on Friday. Now, as you know, the Trump administration swiftly announced plans to replace the prior tariffs with a new across-the-board 15% levy on on U.S. imports. Well, that creates kind of temporary winners. We are still trying to find our way. And we just heard from Mike talking about that when it comes to economists and even Fed officials waiting to kind of figure out what this all means. So let's see, though, exactly where we are, what we are continuing to hear from the White House. We head to the Bloomberg News Washington, D.C. Bureau and to our Bloomberg Intelligence Senior Policy Analyst, Nathan Dean. Hey, Nathan, come on in. Tell us kind of where we are, what has truly changed when it comes to presidential tariffs. Where are we?
Yeah, so President Trump signed an executive order putting 15% tariffs under Section 122 of the Trade Act. Now, these tariffs are global in nature, but they can only last for 150 days. And there's a lot of questions about the legality of these tariffs and also whether or not Congress will appropriate them or authorize them back in 150 days. And we at Bloomberg Intelligence actually think that the real question here is, when is the White House going to transfer from a 122 tariff to what is known as a Section 301 tariff? Now, we think that's going to come within the first 150 days, so we don't think this congressional authorization is all that important. But under Section 301, it requires an investigation. And there are already investigations in place for places like China, certain aspects of Europe, and also Brazil. And then under Section 301, the president does have the authority to go as high as he wants for an extended amount of time. It's actually for about 4 years. And so the real question for us is, what are these investigations going to show? Because sometime in probably the next 5 months, another round of tariff announcements are going to be made. The biggest question, though, is that if the president decides to move forward with these Section 301 tariffs, it's going to come months right before the midterm elections. Is that something the White House wants to do to an American populace that isn't all that popular, or finding it tariffs all that popular? Still TBD on that one.
So, Nathan, when you think about the news that we did get about the Supreme Court decision on Friday, where do we stand now with just how much authority the president has legally to impose new tariffs? Has that authority been scaled back, even now that we see that there are, again, new 15% tariffs?
So it was scaled back under IEEPA, which is the International Economic Emergency Powers Act, but it hasn't in other areas. And so Congress largely delegated tariffs away from its authority about 50 years ago and really hasn't taken any steps to claw that back. So when President Trump says on Truth Social that Congress has given him the power, he's largely correct when it comes to things like Section 301 and Section 232. Now, this is where I think President Trump and the U.S. Trade Representative Jamieson Greer are going to fall back on, is that, look, they were using IEEPA to implement these tariffs on a global nature, but now instead of being able to say, look, I'm going to put in a Truth Social announcement saying how's a new tariff on this country, they have to go back and actually do an investigation. There's a notice and comment period. So while it doesn't provide much clarity for the markets, it at least gives us an idea of what the White House is targeting. So there's a little bit of clarity for the markets, but higher tariffs are still most likely in store.
And Nathan, still in store is the president out on his social media company. And let me just go there, because he did, just after the market opened this morning in New York, President Trump out on social saying any country that wants to play games with the ridiculous Supreme Court decision, especially those that have ripped off the USA for years and even decades, will be met with a much higher tariff, and worse than that, which they just recently agreed to, buyer beware. So once again, we're back to kind of social media. We're back to, it feels like threats. It feels like, a reminder of what many say is a transactional president. So, like, if you don't play ball, there's going to be worse stuff coming. So has a lot changed or not?
So just to play into that scenario, there's really two things that President Trump's thinking about after reading the Bloomberg News reporting that my guess is that he was referring to the European Union news that they were halting negotiations. There's really two ways President Trump can respond to that. He can't use IEPA anymore, but there is an investigation into Europe already under Section 301. So maybe 30 days from now, 60 days from now, we just don't unfortunately know. President Trump could just say, okay, under Section 301, here's the increased tariff for the European Union. And that can last for 4 years, and it can go as high as he wants. The other thing that President Trump can do is actually investigate this idea of licensing, because even though President Trump doesn't have the authority under IEPA to say, here's what the new tariff is, he does have the authority to say, you know what, you want to sell cars in the United States? You're limited at 100,000 or 200,000 or a million. And so that's another avenue that, when President Trump talks about licensing, that's specifically what he's referring to. So long story short, or the short story long is that President Trump still has a lot of authority here, and the clarity, it's a little bit better, but not all that great for markets still at the moment.
Mm-hmm. When you think about their plan, is the White House at all confused about what it's going to do next? Or it seems like you said, they have a lot of options here.
It's really a mixed message coming from the White House, because tomorrow night in the State of the Union, you're going to hear President Trump double down on tariffs, and he's going to continue to say tariffs is my favorite word in the English language. But on the same side, he's also going to be talking about affordability, and he's going to be trying to talk about prices, food prices, consumer goods, et cetera, trying to drive prices down. And it's almost sort of like a mixed message here. So, it's something that the White House will probably have to figure out, because, his approval rating isn't all that great. I mean, we're talking about some of the highest disapproval ratings in his presidency, and we're only months away until the campaign season. So I think that's a message the White House is grappling with, and it's something they're going to have to address.
Yeah, and I feel like members of Congress, GOP members in particular, right, they are thinking about the midterms in a big way too. And I thought it was really smart how you laid out the 301 tariffs and the investigations and how the clock ticks down to the midterms. I mean, they've got to be thinking about what the strategy is as midterms get closer and where they want to be in terms of the U.S. economy and the perception when it comes to things like affordability.
Yeah, I would keep an eye on the primary calendar. Primary season starts in March, and, generally the rule of thumb is you play to the party for the primary, and then you play to the independents when you go into the general election. And so for a lot of the Republican members right now, they just don't want to upset the party, and they don't want to upset President Trump, because as we saw just with Representative Hurd from Colorado, President Trump pulled his endorsement based off of how he voted on tariffs prior to the primary. So after the primary season, which is March, April, and May, after that, you would probably see Republicans move more towards the center and being a little bit more, at least airing uneasiness of this tariff policy, not to the point where they're going to oppose the president. But again, that's where I think the public-facing Republican mantra is versus what they're thinking in private. There's a lot of uneasiness about tariffs in the United States right now, and they still have to figure it out before the midterms.
Hey, just quickly, and in the next hour, we're going to talk about the legality of all of this and what happens in terms of the refunds. Anything you're hearing on that front when it comes to what the White House is expecting or what measures they might do to counter that, or can they at this point? Real quickly.
So, honestly, I think if you're a litigation lawyer and trade refunds, you're going to have a very busy 3 years ahead of yourself, because, this is where I think this is most likely going, is you're going to have to sue the U.S. government to get your refunds back, and it's going to have to play through the courts.
All right, great stuff. As always, Nathan Dean, thank you so much. He's Bloomberg Intelligence Senior Policy Analyst. Nathan Dean there at the D.C. Bureau for Bloomberg News. Hey, coming up next, we're going to get to two of our most read stories on the Bloomberg. One has to do with the weather that's around us. Snow. A lot of snow. And the other rattling a much talked about investment area. Folks, you are looking, for those watching on TV and YouTube and Bloomberg Originals, a live shot of what is still a snowy New York City. Stick around, though. We're talking the most read on the Bloomberg when we come back. Quick check on the markets right now. We are hovering just off our lows of this session, but down about 1% on both the S&P and the NASDAQ 100. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We got ourselves a blizzard of selling on Wall Street with the Dow, the S&P, NASDAQ, all in the red. Stocks are getting hit on AI and tariff jitters, also geopolitical concerns. But the Dow, the S&P, NASDAQ, all down by 1.1% or more. S&P now down 76 to 68.32. The Dow is down 825, down 1.7%. S&P, by the way, very close to session lows. NASDAQ down down 1.2%. The Nasdaq 100 index down 1.3%. The 10-year 4.02% with the 2-year currently yielding 3.43%. Gold is up $104 the ounce, now at $52.12, up 2%. And West Texas Intermediate crude lower, little change, down 0.1%, 66.38 a barrel on WTI. Bitcoin now down by 4.6%. 64,450 on Bitcoin. Earnings news. Domino's delivered in the latest quarter. Domino's Pizza higher after the pizza chain reported a larger than expected rise in comparable sales. Shares of Domino's today, they are higher by 4.4%. Rival Papa John's up by 3.7%. In New York City, in-person school will resume tomorrow. This is Mayor Mamdani continues to advise New Yorkers to stay indoors. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, along with Emily Graffeo, here in our Bloomberg studio in New York City, a snowy New York City. On that, it is actually one of the most read stories on the Bloomberg. It has to do with this Northeast blizzard.
Mm-hmm. It's a powerful winter storm, buried New York City in one of its 10 snowiest days on record, Carol, and poised to rank among one of the worst blizzards in almost 50 years. Over 600,000 or almost 600,000 homes and businesses lost power and more than 10,000 flights canceled through Tuesday.
I am grateful not to have lost power, but we feel for those that are. And it's not over yet. And we know the streets have to be cleaned up, certainly in this area. We want to start there because kind of want to know when this is all over, the tallies, and dare we even ask, might there be more snow coming this week? Because it sounds like there might be. Let's get to it with Bloomberg News weather reporter Lauren Rosenthal joining us here in New York City. Lauren, good to have you here. So where are we right now in the storm? Because if we look outside, it does look like, I'm looking out the windows, it looks like things are calming down here in New York City slowly.
Yes, we could still see another few inches through early evening hours. We are definitely through the worst of it. So don't be surprised if you see some light snowflakes if you're in the Northeast, but you don't need to fear another 2 feet dumping on you in the middle of the night like we had overnight Sunday.
And how has New York City's response been so far? I did see some buses running, a couple folks saying they're taking the subways. The transit system seems to be working smoothly.
Yeah, we've had reports of, subways operating on local schedules, and I've seen buses where I'm based in Brooklyn with chains attached. I think the system's operating slowly, but it is still up and running in places. Amtrak, on the other hand, canceled all service between Boston and New York's Moynihan train hall today, and there are cancellations that have cascaded into New England. So air travel has become impossible over the last day or so. We've seen thousands of flights canceled.
Lauren, I want to go back to what you said. The 2 feet, we're probably not going to get the 2 feet that's already dumped on us. Is that the official tally? And I know from shoveling, and I live just across from Lower Manhattan, I would shovel, and then within the next hour, they're like 4 inches back. It was unbelievable how fast it was coming down. So is it official that we're close to 2 feet here in and around the New York City area?
Yeah, in Central Park, we're at 19.7 inches as of just about an hour ago. If you're on Long Island, yes, totals have inched up above 2 feet. There are reports of up to 30 inches, in some parts of the Northeast. So I'm not quite sure that we'll reach 2 feet in New York City proper, but it may come close.
And so this is one of the 10 snowiest days on record, or have we passed that tally so far? I'm just looking at what your colleague Brian Sullivan had put out on Bloomberg News earlier this morning with some superlatives.
Yeah, it's a 24-hour measurement, and when all is said and done and the measurements are verified, we'll have a better idea. We're far short of the snowiest day on record for Central Park, but this morning we did crack the top 10 24-hour snowfalls observed in Central Park, and those records go back to the 1800s.
All right. It's been a pretty snowy start to 2026. Are we done yet? We were sitting in their makeup room this morning, and people are like, yeah, there's more snow coming this week. Is there more snow coming this week?
Unfortunately, it is a possibility, depending on how you feel about winter. there are chances of some sort of slippery winter mix later in the week, and some forecast models have hinted at the possibility of another nor'easter next week. However, this far out, it's difficult to say with certainty whether we will see another significant snowstorm.
Well, and I guess it all depends on the weather. We know that first one that hit us, it was so cold, stayed so cold for so long, which is why that snow, which just disappeared in my neighborhood on Saturday, and is now, we're full of snow once again. But we'll see whether or not the temperatures start to kick up a little bit, so that maybe it doesn't stick around as much. Having said that, is it too early to say 2026 in terms of how it stacks up in terms of snowfall?
Yeah, we have a ways to go before winter is over. I think, a lot of the forecasters we talk to on a regular basis have cautioned us. We may not be out of the woods until April. So we have a ways to go before we know exactly how bad it was this winter.
All right, we're going to leave it there. Hey, Lauren, thank you so much. Appreciate the update. Lauren Rosenthal, Bloomberg News weather reporter. All right, you are up to date on the storm. Now let's get to another thing that's been on our radar, not the weather radar, but certainly on the investment radar, and that is Blue Owl. Bloomberg exclusively reporting that the money manager and investor in private credit has permanently shut the gates on one of its funds, preventing investors from withdrawing their cash, and is selling assets to return investor capital. Shares of Blue Owl are down for a third consecutive day, for a drop of about 16% over those 3 days. It's now down more than 60% since a high back on January 24th of last year. So let's get to it. An update. Bloomberg News Senior Editor for Credit, James Crombie, joining us here in studio. Good to have you here with Emily and me. I know this is her world, and I know you guys have all been talking a lot. Investors, though, continue to sell shares of Blue Owl. What's the latest? What's the latest update?
Well, we're still seeing the stock down, obviously. The bonds are under pressure. I mean, I think the two big questions now are, one, how much stress is in their portfolio? We know that they were very active in the software lending, and that sector obviously is under a lot of pressure again today. But not just Blue Owl, but the whole private credit business had a lot of exposure to technology and software. Those loans are coming due. They all need to be rolled over. What happens next? The other big question, I would say, is what does this do to the big retail push for private credit, which has gone from 0 to 1.8 trillion very, very quickly. The retail push is founded on this belief that you could get to 40 trillion fairly soon in private credit. If retail gets rattled and backs out, that whole $40 trillion dream falls apart.
And tell us about what makes Blue Owl specifically unique, because they have vehicles that retail has been able to access for quite some time now, even before the White House is trying to get retail into private assets. So what about Blue Owl makes it so that we're talking specifically about this firm right now instead of other alternative asset managers?
I mean, I think the whole sector's under pressure. Blue Owl has BDCs just like the other ones do, and this is the fund we're talking about. It's a business development company, a very, on the face of it, boring fund that just makes very straightforward loans to companies, often middle market companies that and they're in the high street. So, Blue Owl has become kind of the whipping boy for private credit, possibly because of their bigger exposure to software, which everyone is very worried about with the move to AI.
But this gets to, there's not a lot of transparency about all the investments. I assume that if you are an investor in one of these funds, you have an idea of what is in these funds. But is that a wrong assumption?
Well, if you're a lender directly, you get a lot of information. And then if the group gets slightly bigger, then those new lenders get more information. But if you're joining late or if you're way down the stack, you probably don't get a lot of information, not much transparency. You certainly don't get very many updates on the price. And as we've seen with BDCs across the board, they all have the same loan. Some of them are marking them at 95 and some of them are 70.
I want to ask you about something. Bank of America is out and says a significant level of misinformation, that's their word, that caused a rout in Blue Owl Capital shares presents an attractive buying opportunity in the stock and some peers, according to BofA Securities. Here's what they say. Misinformation stems from a lack of understanding of what private credit is. So we constantly here at Bloomberg remind everybody about private credit is kind of a different beast. And it's not as liquid as some other things. You invest for a while. But what are they getting into? I mean, what is the lack of understanding when it comes to private credit that maybe investors don't get? Is it that your money gets locked up? But this sounds like it's something more than that.
Well, the word private, I think, worries people. What you don't know can harm you. There's a fear of the unknown, basically, and I don't think the private credit people. We went through this golden age a couple of years ago. Now we're hitting the wall of the maturities. I don't think they've done a particularly good job of explaining the stress which we're seeing rising in terms of payment in kind, in terms of non-accruals on the BDC side. So there's certainly distress. We are hearing loans trade or new lenders coming in and offering much lower levels for loans that are coming up for maturity. So they're under a lot of stress. But it's hard to be transparent when you are actually private.
You've covered credit for a long time. I'm wondering what your take is on why credit spreads in public investment grade and public high yield are so calm if we're seeing the BDC performance showing a lot of investor jitters about credit and lending.
Part of that is when we talk to high yield managers who've been doing this a long time, they talk about private credit as a cleansing device for their market. And so, what they'll tell you is that the private market is taking the stuff that they don't want, so the bad loans, and that has a beneficial effect. And so therefore, high yield and leveraged loans should be safer, they should be higher quality, therefore spreads should be tighter.
James, I think about this all the time because you talk to somebody in the private credit space and they say, we're top of the tier in terms of what we're investing. Like, we know we're doing all the due diligence for our investors. And to some extent, you have to think that those funds are not going to continue to attract new money if they're not providing the returns. So maybe there is a checks and balances, but the more I hear that, the more I'm like, it can't all be top tier.
Well, we've had that conversation for, I would say, the last 3 years with all of the new private credit people and all of the existing private credit people. And one of them actually made the comment that, yes, there are bad deals being done, but it's not them, it's the, quote, tourists.
In just the last minute.
Are they right, though?
We'll find out.
We don't know yet.
We'll find out.
That's what this is all about.
There's a lack of transparency that's leading to fear of the unknown, and it's feeding on itself at this point.
And yet we have, rightly so, the founders of Blue Owl defending themselves. Co-CEO Mark Lipschultz said performance has been strong, loss is minimal, investors are ignoring facts and acting out of fear. Where are the investors not seeing eye to eye with the founders? Why such a big difference, I guess?
I think also retail was kind of led to believe that they might have more liquidity than they actually do. And that's the whole point about the push to, let's say, 401ks and everything else in retail, that you do kind of expect a bit more transparency, a bit more liquidity. And then when you suddenly realize that you don't have it, then you start to panic.
But to that point, maybe investors don't understand that, right? You're locking up your money, but permanently shutting the gates of one of your funds, that's not what the goal is, right? Like, that's not ideal.
It's not. It's certainly surprised a few people.
Okay. All right. TBD. I'm guessing there'll be more stories on this, as there has been over the last week or so, and then some. James, thank you so much. Really, really appreciate it. Bloomberg News Senior Editor for Credit here at Bloomberg, James Crombie, joining us here in studio. It's just already one of the stories of 2026. And we'll see, right?
Yeah.
If it has more legs or it hits other firms.
And we can see those losses in the shares of the BDCs. Down over 60% in the last 12 months.
Right. There's worry right across that group. Hey, folks, stocks are bouncing along their worst levels of this session. Stick around. More to come.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all very much in the red. Close to session lows right now on the S&P 500 index. Stocks are getting hit on AI and tariff jitters, also geopolitical concerns. Right now, the S&P 500 index is down 82, a drop of 1.2%. The S&P at 6826. Dow Industrials down 840, a drop there of 1.7%. The NASDAQ Composite Index now down 307 points, a drop there of 1.3%. The 10-year yield at 4.02% with the 2-year 3.44%. Gold is up 2.1%, $52.13 the ounce on the precious metal. West Texas Intermediate crude lower a little change, now down 0.2%, $66.36 a barrel on WTI, and Bitcoin down now by almost 5%, $64,230 on Bitcoin. Novo Nordisk Nordisk's next-generation obesity shot delivered less weight loss than Eli Lilly's rival blockbuster, and yet another blow to the Danish company's attempts to regain lost ground in the weight loss market. Novo Nordisk ADR is now down by 16.5%. Eli Lilly shares up by 3.9%. Just getting word from Crypto.com that it has won conditional approval for a U.S. bank charter, paving the way for the digital asset exchange to offer its crypto services. And in New York City, in-person school will resume tomorrow. Mayor Mondani continues to advise New Yorkers, though, to stay indoors. Recapping, S&P down by 1.2%. I'm Charlie Pellet, Carol Massar and Emily Graffeo. That is a Bloomberg Business Flash.
All right, so appreciate it, Charlie Pellet there. Carol Massar along with Emily Graffeo in for Tim on this Monday. We just want to point out we just did an update on Blue Owl. It is among our most read stories on the Bloomberg with our own James Crombie. He actually does a podcast, right?
Yes.
On the private world, the private market world.
On all credit. It's called The Credit Edge with Bloomberg Intelligence, private credit, but also public markets as well. You can get it at Apple, Spotify, wherever you get your podcasts. They interview top investors and strategists in credit.
Which is such a big part of the AI story, but just so much. So we highly recommend that you check it out. In the meantime, a lot too coming from our Bloomberg economics team. In fact, they put out a brief today. And they noted that we started 2026 with a bullish outlook, but not even 2 months into the year, many of our assumptions are being challenged. And they talk about things like the Supreme Court ruling, concerns about the AI boom and all the spending around that. So we wanted to see what our next guest has to say. He's actually where Michael McKee is, surrounded by Fed officials and economists. Great to have back with us Greg Daco. He is chief economist at EY-Parthenon, and he joins us from the 2026 National Association of Business Economics Policy Conference in Washington, D.C. Greg, so glad you could catch up with us. I'm here with Emily Graffeo. Has the game changed in terms of the U.S. economy, starting with the Friday Supreme Court decision? Are all bets off?
Yeah, I mean, I think in general, what we're seeing in terms of the U.S. economy is still ongoing resilience, but a lot of uncertainty as a result of the Supreme Court ruling, as well as a result of the subsequent announcement by the administration to impose the Section 122 15% tariff, which have a maximum duration of 150 days. From a business standpoint, this is a highly uncertain environment. It's one where it's very difficult to plan how much you're going to invest, how much you're going to be hiring, and it makes it very difficult to plan in the long run. So in terms of the momentum for the overall U.S. economy, the paradigm has not shifted that much, but we are going to be in an environment where there is likely to be more restraint in terms of investment because of this latent uncertainty when it comes to trade.
What does it mean for growth prospects in the U.S.? Talk about kind of how you guys are calculating the outlook for growth now that, you know, some tariffs are being taken away, but now more are being proposed.
Yeah. So if you put it simply, and you think about the IEEPA tariffs that were imposed, with the IEEPA tariff, you had an average cost of doing trade with the U.S. that was around 17%, 16.9%. That was the average tariff rate. With the Supreme Court ruling that the imposition of these tariffs was not legal, that brought down the average tariff rate to about 9%. Now, with the subsequent re-announcement of Section 122 15% global tariff, you're back up to around 13.5%. So a big share of essentially this potential easing in tariff restrictions has been offset by the new announcement of these new tariffs. In terms of GDP growth, we were anticipating a drag from the IEEPA tariffs of about 1.2% of GDP. Without them, only about 0.6% of GDP. Now, with the new Section 122 tariffs, we're back to a drag of about 1% on GDP growth. So a lot of the relief has actually potentially been offset by this new announcement of new tariffs being imposed.
All right. One step forward, two steps back, it feels like. Greg, I do want to get to what your note you wrote and you put out specifically on this, and you do, and this is some of what you just covered. You say the Supreme Court's decision materially reduces the economic drag associated with IEEPA-based tariffs. Effective tariff rates have fallen, fiscal revenues will decline, growth headwinds have eased, and inflation pressures moderate at the margin. However, tariff risk has not been eliminated and policy uncertainty remains elevated. You just talked about all of this, and I just go to this idea of uncertainty, whether it's over AI spend, whether it's over tariffs, what have you, this is never good for an economy.
Yeah, that's right. In general, business leaders across various sectors always want to know what's going to happen next, even if that means there is a tax increase on the horizon or a tariff increase on the horizon. As long as they know that there is going to be stability in the environment they're going to evolve in, they are able to plan. Without that stability, they're much less able to plan. And you were just talking, Carol, about inflation. And I think it's important to remind everyone that even if there is an easing in the average tariff rate, it's an open question as to how much of that easing in input cost will be passed on to consumers, because we know a lot of businesses have been compressing their margin as a result of these tariffs to avoid passing on the cost to consumers. So it's very realistic that even with some easing of the tariff rate, there's not going to be much relief on the price front, because businesses are not necessarily going to pass on these reduced costs onto consumers.
Yeah, let's talk about the consumer and what this all means for household incomes.
Yeah, I think that's a very important component of economic activity, and we tend to forget it. If you think about how the Fed is conducting monetary policy, it has two mandates. It has an inflation mandate, it has an employment mandate. But the reality is that we're forgetting about the income component of economic activity. And when you look at developments in terms of the labor market, there has been fewer job growth, less job growth. We're talking about a jobless expansion, and wage growth is under pressure. You combine the two, and you have a trajectory for real disposable income growth that is gradually cooling. And adjusted for inflation, real disposable income is below 1%. What does that mean for the average person? It means that they're less able to spend freely. And so we're seeing this deceleration in consumer spending activity as a result of this slower trajectory for income. And I think that's a key risk that we have to be increasingly focused on in a jobless environment.
It makes me a little nervous. It makes me think of something Emily talked about on Friday about, for a while we were talking, was it last year, the year before, a lot about stagflation, of slower growth, but higher prices, inflationary pressures. And, even Fed's Chris Waller says the March rate call depends on the labor market. He's watching the weakness in the labor market. Should we be talking or even thinking about stagflation at this point, Greg?
I don't think it's the right time to be talking about stagflation, in the sense that if you look at growth numbers, they're actually quite strong. And inflation, yes, is slightly above 2%, but it's not alarmingly so. We're not in a stagflationary environment in the purest definition of the sense, where inflation would be at 5% and growth would be 0. We are seeing an economy that's growing at 2.5%, and we are seeing inflation slightly above the 2% target. One thing that I'm increasingly concerned, though, is this notion that not everybody is benefiting from this economy. We have an environment where a lot of the growth is productivity driven, and we have an environment where a lot of the growth is driven by AI investment. Not everybody benefits from these gains, and that means that the income for some may be really strong, but the income for a majority is under pressure, and that in turn is a key constraint in terms of economic activity. So I'm not as concerned about stagflation as I am potentially about downside risk to growth because of this slowdown in real disposable income growth.
Right, and I do think about the gaps, right? And if some don't feel the benefits of that growth, their income not growing, for them it maybe doesn't feel so good. Greg, thank you so much. I know it's a busy event. So glad we could check in with you. Greg Daco, he's chief economist at EY-Parthenon there at the NABE event in Washington. Hey, coming up, the author of The Black Swan on President Trump's tariffs.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody. Carol Massar along with Emily Graffeo here on Bloomberg Businessweek Daily. Emily in for Tim on this snowy Monday. Hey, not snowing down in Miami. Underway in Miami is the Global Alts Conference, and our own team there on the sidelines, checking in with everybody who's there. Universa Investments, they are the folks that have brought everybody together. They're convening dozens of investment allocators and risk analysts to talk about the approach to markets in this time of growing economic and political uncertainty. There's a lot coming at investors. Bloomberg News equities reporter Natalia Kenijevich is in South Florida. She's been covering the event, and earlier today, she exclusively caught up with Universa's distinguished distinguished scientific advisor and author of The Black Swan. We're talking about Nassim Taleb. And they talked about a lot of things. They talked about AI, markets, U.S. trade policy, and yes, of course, tariffs.
In terms of tariffs, by the way, we still have so much uncertainty related to the U.S. tariff policy. So on the one hand, we see that earnings are remaining resilient for U.S. companies. The economy is doing fine, but we do still see this K-shaped recovery. How big of a concern is that?
The thing is, I'm not into short-term, commentary, but rather about structural risk and long-term effects of policies. The tariff policy, tariffs can be a smart thing. The execution of that is completely crazy and erratic. It doesn't give you an incentive to invest. So if you know that they're going to have tariffs permanently, you go invest in the sector. We don't even have that. They can change their mind. Again, an erratic administration is not helping. And plus, the tariffs are not selected in a way to be rational, because they affect a class of the population that's, it is a regressive tax. So it's going to have an effect. If it doesn't have an effect yet, eventually things will show.
On low-income consumers specifically, or just bigger economic picture?
Overall, you have a shift. You have a shift, for more inequality. And this exacerbates it, and it's not helpful in the long run. And that shift for inequality has been exacerbated by AI.
Let's talk about AI, by the way. So we saw a huge sell-off in the stock market, driven specifically by some AI names. What is your take? What's happening?
Again, it's structural. That historically, if you look at history, the car companies, airline companies, and of course the personal computer. Okay, if you look historically, that those who started the business, the pioneers, are not necessarily the winners. As a matter of fact, they're probably more likely to be the losers. So now people take names of AI and say, okay, these are going to win, let's invest. I'm sure someone's going to make a lot of money in both software and hardware related to AI, but doesn't necessarily have to be these companies, because you have a lot of instability, both technologically and, of course, in geographically with AI.
So does it mean you expect bankruptcies in, let's say, software space?
Definitely. Plus, the effect on the stock market, as you realize that the previous rally that we had was driven by a very small number of names. And now we probably have some rebroadening effects, some redistribution. But a lot of the gains in the stock market, are going to be eradicated by that. So this is why we're at a juncture of a lot of instabilities across many domains.
All right, everybody, that's Universe's distinguished scientific advisor, author of course, The Black Swan, Nassim Taleb, with our own Bloomberg News equities reporter, Natalia Kinney-Javich, at this week's Global Alt Conference that's underway in Miami. What's interesting is, Emily, they talked a lot about what's going on with software and payment shares companies. We're seeing them sink. It all has to do with this report. I actually printed it out. Wow. It's kind of long. It's from Citrini Research, and they get into some of the potential risks that artificial intelligence could pose to various segments of the global economy. And we, over the last couple of weeks, have been seeing that AI scare trade play out.
Yeah, and now the researchers over at Citrini, they do make sure to emphasize that they're not making a prediction necessarily that this is how the economy is going to be disrupted by AI, but they lay out this scenario where essentially AI is so efficient that it starts really seriously replacing white-collar jobs, and then that ripples through the economy and growth. And they also talk about different kind of ripple effects on even private credit, because now that industry is investing so heavily in AI.
Which
and
is
we're
kind of wild.
Seeing this report seemingly move markets, Carol.
It's interesting because they're talking about DoorDash, American Express, KKR, Blackstone, all slumping more than 8%. Shares of other companies name-checked in the article, including Uber Technologies, MasterCard, Visa, Capital One Financial, Apollo Global Management, were all lower by at least 3%. This is at some point during the day. So they say the sole intent of this piece is modeling a scenario that's been relatively underexplored. Hopefully reading this leaves you more prepared for potential left tail risks as AI makes the economy increasingly weird.
The idea is that perhaps the more bullish you are on AI and just how much AI is going to change the world, the more likely this scenario actually could come true. So certainly something to watch.
And I think you have to square Citrini's research with what everybody says. We're so early in on this process. We don't really know the full impact or how it all kind of impacts us and who wins, who loses. So lots more to come. Speaking of lots more to come, the close coming your way on television. Emily and I continuing on Bloomberg Businessweek Daily. You are listening and watching Bloomberg.